What if I told you there was a place where your money could work while you sleep? A world where every penny can become a soldier going to the front and coming back with reinforcements. This place is neither a dream nor a myth. It's a concrete reality that thousands of people exploit every day. Just imagine. You don't have to scratch a lottery ticket. You don't need to inherit a fortune or have studied finance for years. Just you, your mind and a good strategy. Ordinary people, just like you, become millionaires year after year thanks to this system. That place is the stock market. The famous stock market. But this is not a game of chance. It's a world that rewards those who educate themselves, who plan ahead, who understand the rules before they play. And today, you've taken the first step. You want to understand, you want to learn. And that's exactly what I'm going to help you do. Stay tuned until the end of this video, because I'm going to show you how you too can profit from the stock market. Whether you're starting from scratch, young or old, there's a place for you here. Hello and welcome to Theli-media, the media that trains you for financial independence. Get ready, because today you're going to discover how to transform your relationship with money. For good. What is the stock market? Imagine a huge global marketplace, open 24 hours a day, where billions of dollars change hands every day. This is the stock market. But unlike traditional markets, where we trade tangible goods, here we trade company shares. What is a share? A share represents a fractional ownership interest in a company. When you buy a share, you become a co-owner of that company. For example, if you buy a share in Apple, you own a small part of this iconic company. This means you have a right to a portion of the company's assets and profits. Some shares also offer voting rights, enabling you to influence certain decisions at general meetings. Where does trading take place? Stock market transactions take place on exchanges such as the New York Stock Exchange, NYSE, NASDAQ or Euronext. These platforms facilitate the buying and selling of shares between investors. Thanks to modern technology, you no longer need to be a financial expert or wear a suit and tie to invest. With a smartphone and an internet connection, you can access these markets and start investing. Today, numerous online applications and platforms make it easy for individuals to invest. Applications such as Robinhood, eToro, and DeGiro offer user-friendly interfaces for buying and selling shares. This has democratized investing, making it accessible to a greater number of people, regardless of their experience or initial capital. Why invest in the stock market? Investing in the stock market can be an effective way of growing your wealth. Historically, stock markets have offered superior returns to other forms of investment over the long term. However, it's essential to understand the associated risks, and to educate yourself before taking the plunge. How can I profit from the stock market? Now that you know what the stock market is, the real question is, how can you profit from it? Well, there are several strategies for putting your money to work and potentially generating income. Long-term, buy and hold. This is the preferred method of Warren Buffett, one of the world's richest investors. The idea is simple: you invest in solid companies with a good track record and a promising future, and let your money grow naturally over the years. No daily stress, no need to watch the curves every hour. Time and patience become your best allies. Historically, this method has enabled many to build real fortunes. Dividends. Regular passive income. Some companies share a portion of their profits with their shareholders, in the form of dividends. All you have to do is own their shares to receive this money, sometimes on a quarterly basis. It's passive income, and can even be used to supplement retirement or reinvest. The more shares you own, the more you earn. Active trading. For the more dynamic, trading means buying low and selling high. Some do it over a few days, others in a few minutes. It's exciting, but also risky. Markets can be unpredictable. You need training, discipline, and the ability to manage your emotions. It's not for everyone, but with discipline, some succeed very well. ETFs, smart investing even with little money. You don't need thousands of euros to get started. Thanks to ETFs, exchange-traded funds, you can invest in a basket of diversified stocks with less than 10 euros. An ETF tracks an index like the S&P 500 or the CAC 40, giving you broad exposure with a single purchase. It's simple, effective, and perfect for beginners. What about you? Are you a patient investor or an active trader? Tell us in the comments. We want to know your style. You might even inspire other subscribers. The pros and cons of the stock market. Now that we've explored the different ways to profit from the stock market, it's essential to understand the pros and cons of investing in the stock market. This knowledge will enable you to make informed decisions and better manage your investments. The advantages of investing in the stock market: high return potential. Historically, the stock market has outperformed other forms of investment over the long term. For example, the S&P 500 index has generated an average annual return of around 10% over several decades. This means that, despite short-term fluctuations, patient investors have often been rewarded. Passive income through dividends. Some companies regularly pay out part of their profits in the form of dividends. These payments can provide a passive income stream, particularly attractive to investors looking for regular income. Accessibility and flexibility. With the advent of online trading platforms and mobile applications, investing in the stock market has never been so accessible. It's possible to start with small amounts, and investors can buy or sell shares at any time during market hours. Investment diversification. The stock market offers a multitude of investment options, allowing investors to diversify their portfolios across different sectors, geographic regions, and asset types. This diversification can help reduce overall portfolio risk. Disadvantages and risks of investing in the stock market. Market volatility. Stock prices can fluctuate considerably in response to economic, political, or company-specific news. This volatility can lead to significant losses, especially if the investor reacts emotionally to market movements. Risk of capital loss. Unlike some guaranteed investments, equities do not guarantee the capital invested. In the event of poor company performance or unfavorable market conditions, it is possible to lose part or all of the initial investment. Complexity and need for knowledge. Investing effectively in the stock market requires a certain understanding of financial markets, corporate financial statements, and economic factors. Without this knowledge, investors can make ill-informed decisions. Influence of external factors. Unforeseen events such as economic crises, political changes, or natural disasters can have a negative impact on stock markets. For example, the 2008 financial crisis led to a significant fall in world markets. Investing in the stock market offers significant opportunities for capital growth and passive income generation. However, it is crucial to understand the associated risks and prepare accordingly. A well-informed, diversified, and long-term approach can help navigate the ups and downs of the stock market. How to get started in the stock market. Strategies and practical advice. Now that you understand the basics of the stock market, let's explore how you can start investing effectively and securely. Define your financial goals. Before investing, clarify your objectives. Short-term, save for a major purchase or a trip. Medium-term, prepare a down payment for a property. Long-term, build up savings for retirement or children's education. Your objectives will determine your investment strategy and risk tolerance. Establish an investment budget. Only invest money you can afford to lose. Avoid using funds intended for essential expenses or precautionary savings. Choose the right brokerage platform. Choose a reliable, user-friendly platform. Look for those that offer low fees. Avoid high commissions. Accessibility, possibility of investing small amounts. Educational tools, for ongoing training. Start with index funds, ETFs, exchange-traded funds, allow you to invest in a diversified basket of stocks with a single purchase. For example, SPDR S&P 500 ETF Trust, SPY tracks the performance of the 500 largest U.S. companies, Vanguard S&P 500 ETF, VOO. An alternative with low management fees. These funds offer instant diversification and are ideal for beginners. Adopt the dollar cost averaging, DCA, strategy. Invest a fixed amount on a regular basis, e.g. every month. This approach smooths the cost of buying stocks over time and reduces the impact of market volatility. Continually educate yourself. Financial education is essential. Recommended resources are books and websites that talk about investing, articles and tutorials on investing. Stay disciplined and patient. The stock market can be volatile. Avoid making impulsive decisions based on short-term fluctuations. Take a long-term view and stick to your strategy. Are you ready to take the plunge and start your investment journey? Share your goals and questions in the comments. Risk management and stock analysis, the keys to smart investing. Now that you've got a solid grounding in how the stock market works and investment strategies, it's essential to understand how to manage risk and analyze stocks to make informed decisions. Risk management, protecting your capital. Investing in the stock market involves risks. Here are some strategies for minimizing them. Diversification. Don't put all your eggs in one basket. Spread your investments over different sectors, regions and asset types, equities, bonds, real estate, etc., to reduce the impact of poor performance by a single asset. Define your risk tolerance. Evaluate how much loss you are prepared to bear. This will help you choose investments suited to your profile, whether conservative, moderate or aggressive. Use stop-loss orders. A stop-loss order automatically sells a share when its price reaches a certain threshold, thus limiting your potential losses. Invest regularly with the DCA method. The dollar cost averaging strategy involves investing a fixed amount at regular intervals, irrespective of the share price. This reduces the impact of market volatility on your portfolio. Avoid emotional decisions. Markets can be volatile. Stay true to your investment strategy and avoid making impulsive decisions based on fear or greed. Stock analysis, choosing the right companies. To invest intelligently, it's crucial to analyze stocks. Here are two main approaches. Fundamental analysis. This method assesses a company's financial health by examining sales and earnings. Steady growth is a good sign. Price/earnings ratio, PE, compares share price to earnings per share. Debt. A company with manageable debt is generally more stable. Dividends. A history of dividend payments can indicate a solid company. Technical analysis. This method relies on the study of price charts and volumes to predict future movements. Common tools include moving averages, indicate the general price trend. Support and resistance levels, points at which the price tends to bounce back or collide. Technical indicators, such as the RSI or MACD, which signal overbought or oversold conditions. Practical advice for beginners. Start small, invest amounts you're prepared to lose. Continually educate yourself, read books, take online courses and stay abreast of business news. Be patient, investing in the stock market is a marathon, not a sprint. By understanding and applying these principles of risk management and stock analysis, you'll be better prepared to navigate the financial markets and achieve your investment goals. If you found value in this video, please feel free to click on like. It's a huge support to our mission of making finance accessible to everyone. Share it with a friend or loved one who wants to start investing but doesn't know where to begin. It might just be the little push they need to change their lives. And above all, subscribe to Theli-media and activate the notification bell, because every week, we'll deliver concrete, clear and powerful content to help you build your financial independence. Thank you for watching. Stay curious, stay motivated, and above all remember, your financial future doesn't depend on luck or chance, but on the decisions you make today. See you soon for a new video.